Yeah, man, let's do it. Jedi Options, March 15th. Appropriate for today, we are going to talk about volatility. We've had a VIX spike. You've got people running around with their hair on fire. I specifically want to talk about the impact that the high implied volatility has on selling puts, naked puts, in other words. We've referenced selling puts. Mark loves the strategy. I love the strategy. Anybody who sells options should be affectionate towards selling puts. And it's a little, I think for some people, it's counterintuitive to think about why a bullish leaning strategy like selling puts is suddenly attractive. It seems like the stock market looks terrible. Why would your desire to pick up some bullish exposure increase when there's so much uncertainty? I just want to explain the pricing dynamic behind why that's the case, and why we're not crazy, why it does become more appealing in a situation like this. So let's take the volatility component first. Remember that when you look at an options price, often referred to as the options premium, right? One of the inputs is expectation of future, I'm going to say volatility. You could substitute that with movement. Okay, how much people pay for a call or a put is a direct reflection of how much they think the stock's going to move. Okay, and so if expected volatility rises, right, options get expensive. As you would expect, I think people are willing to pay more for puts today than they were 3 weeks ago. There's more uncertainty. There's more fear. There's an expectation that the market's going to move more. Okay. And so when you take a look at the VIX, which generally is the benchmark we use for implied volatility, how much movement is expected in the future, how much is baked into option prices, you've seen a big spike. Listen, we were 18 a week and a half ago. We got up to 30 today. It's not doubling, but it's I don't know percentage wise how much it's up, but it's gone up a lot. It's gone up a lot. As a result, option premiums have expanded dramatically. Okay, so the takeaway is that you can now sell puts and calls, for that matter, for more premium than was previously available. Okay, and it's particularly potent on the put side because there is an imbalance between whether people are panicking and buying calls right now or buying puts. You tend to get a little more juice priced into the puts in a situation like this than the calls. So you could say, yes, in general, option premiums are offering bigger paydays if you're selling them, but that's particularly true on the put side, right? And so, all right, so if you sell a put, okay, you're capitalizing on the higher premium, okay? So the high IV, you're getting the benefit there. But as a result of that, here's the second benefit. Okay, here's the second benefit. So benefit one, more money. Benefit two, as a direct result of that, I can go way further out of the money than I could previously. Okay, so you get a wider, let's say wider profit range or a bigger margin of error. Okay, that really is the kicker here. If you take a look at, we're just going to use the S&P, but you could substitute this with pretty much any stock right now. If you look at how far out of the money you can get by selling a put option for a decent premium, maybe before this week, you could go $30 out of the money. Okay. After this week, you're maybe going $60 out of the money, right? And it's not the 30 or 60 that matters. It's just the fact that you can maybe go twice as far away, right? And so one of the things that you think about with selling a put, because selling a put is bullish, okay? Generally, this is a bullish type of bet, but it's not that bullish. And the reality is you're betting, right? You're betting the put will expire worthless. Will expire worthless. And to do that, it simply has to be out of the money and the stock not really fall too far, right? So one of the things that you kind of change about the way you think about selling a put option is it's not so much an aggressive bullish bet. You may even sell puts if you're kind of bearish. It's just I don't believe the market will sell off as much as is feared. That might be your opinion, your bias, your reason for selling a put. It's not that you're gung-ho bullish. You recognize the market's in turmoil right now. You recognize the S&P's in a downtrend. It's just that it's gotten so out of hand, that the fear is so pervasive, that the market is so oversold that you're like, listen, at this point, things may be bad, but they're not going to be that bad. They're not going to be that bad. And that might be all it takes to justify selling a put. For instance, you take the S&P and you may say, listen, I know there's drama out there. I know there's turmoil. I just don't know that we're going to get down to 340. I just don't know at this point if it's going to get bad enough to hit 340 in the next month. So I'm going to come in here and I'm going to go out to April and I'm going to sell a 340 put, pick up $230, right? Or I'm going to come out and sell a 325 put, pick up $145. Not because I'm ragingly bullish, but I just think it's gotten to the point where they're paying so much money for these way out of the money puts that I think it's worth selling them. I think it's worth selling. And it's even more powerful if you're willing to buy shares, because then you position it as a win-win where it's like, well, I mean, I think there's a 95% chance it ain't going to get down there. But if it does, the obligation I'm under by selling the put is to buy some shares. And you know what? I like the S&P at 3,200. I think at that point, the recession's priced in, and it's a great long-term buying opportunity anyways. And so you can go into it with the confidence that A, very good odds I'm going to be right. B, if I'm wrong, I get the opportunity to do something I was willing to do anyways, right? And see, I wouldn't normally be able to sell a put down at 325 for that amount of money. It's only because the VIX is so high, right? And so if you set aside the near-term fear, final point, and you just say, I know everybody's freaking out. What's a bet I can make that with the very high probability and maybe a ticker symbol I'm willing to purchase? You start to see why the attractiveness of puts is so juicy right now, even if we're early, even if the market keeps selling off, if the margin of error, if the range of profit is wide enough, it still often is a bet worth taking. That's why you have people making the case right now for maybe selling puts in this high VIX environment.